Thanks for clicking! The Bank of Canada is once again entering the repo market, engaging in 3 rounds of $10 billion injections over the past 3 days. Or, as the media puts it, to be fair, they did actually catch it this time, though it was hidden in an article where CIBC is urging the central bank to end quantitative tightening, the process through which the Bank of Canada sucks money out of the market that it printed during the pandemic. But, says CIBC, the bank's insistence on pulling out that nearly $400 billion that was printed means the banks have started to run out of cash, which has led to hoarding. Meaning, banks are no longer willing to lend each other money at the rate set by the Bank of Canada. Given that the banks still have collectively over $100 billion sitting in their accounts at the Bank of Canada, and that the central bank is still having to step in providing emergency loans, this suggests that someone is low on cash. And, actually, some are even suggesting that the central bank penalize those banks which are refusing to lend out their money.
You pay till I tell you don't have to pay no more.
So what I want to do today is very briefly go over quantitative easing and quantitative tightening, take a look at why the Bank of Canada is having to inject cash into the banking system, and then discuss some implications. As we'll see today, the Bank of Canada's overnight repo injections caused by the bank pulling too much money out of the system after it put too much money in the system is an ongoing story, one that we will continue to cover on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these repos. Onto the repos. First off, a very brief background on quantitative easing, which the Bank of Canada engaged in throughout the pandemic. At the beginning of the pandemic, the Bank of Canada had already dropped rates to 0, but that can only go so far in stimulating the market, as the bank only controls short-term interest rates.
Really?
No, it's true. So, in an effort to A, get money into the financial system, and B, put downward pressure on fixed-rate mortgages, the Bank of Canada began buying up government bonds off of the books of our banks. Doing this helped to keep the yields on Government of Canada bonds low, which put downward pressure on fixed mortgage rates.
He was the best guy around!
And the central bank did a lot of this. As mentioned, they created or printed nearly $400 billion worth of settlement balances up for the banks. But the problem with putting all of that money into the banking system is that it tends to get into the real economy, this time specifically designed to do so, increasing the money supply. And, as it always has since the beginning of recorded history, when you print money, when the government prints money that gets into the real economy, that creates inflation. Or, as the Bank of Canada puts it, we had a lack of supply of goods. Fast forward to now, and the bank has been engaged in quantitative tightening, the opposite of quantitative easing. Sort of. Remember all of those bonds, those government bonds that the bank bought up from all of Canada's banks? Well, the Government of Canada still owes that money. And, through quantitative tightening, when the government pays back that money to the Bank of Canada, the Bank of Canada doesn't buy any new bonds. So, the government gets money through taxes, also from borrowing from the issuance of new bonds into the market, and that money goes back to the central bank to pay back those old bonds, and then that money basically disappears. And that's the way that the central bank drains money out of the system.
Now I gotta turn my back.
Though, I don't see why the central bank has to get the money out of the system if it was the supply of goods that caused all of the inflation. If QE, if money printing doesn't cause inflation, then why not do it forever ad infinitum and allow the real estate market to go to the moon and we all get rich?
We are so rich.
Regardless, the bank has been sucking all of that money out of the system to such an extent that CIBC says that money is now becoming scarce, and that the banks are hoarding settlement balances, the money that the bank injected during the pandemic. And this brings us to the overnight repo operations that we've seen over the past few days. Every single day, banks, Canada's banks, trade cash and collateral amongst each other. So if one bank is low on cash but has a lot of collateral, it will trade that collateral for the cash that it needs. This happens every day, and most Canadians are very unaware that it even occurs in the background. Unless, that is, the banks with all of that cash, the banks that CIBC says that some of the banks are hoarding, refuses to lend out that money at the rate set by the Bank of Canada, the target rate, the 4.75%. If one of the banks tries to charge an interest rate higher than that 4.75, then the Bank of Canada steps in and lends the money itself, vis-a-vis an overnight repo operation, which is what it did on July 17th, 18th, and 19th. And the reason why all of this is a bit concerning, with CIBC calling for an end to quantitative tightening, is that there's still a lot of money on the books of the banks. As mentioned, the banks still have $105 billion in their accounts. In fact, former Deputy Governor of the Bank of Canada, Tony Gravel, once said that the bank didn't expect to end quantitative tightening until those settlement balances had dropped down to $20 to $60 billion, which means that some bank, some lender, some counterparty is low on cash, with CIBC noting that too few counterparties own a disproportionately large amount of reserves. In fact, says CIBC, 80% of those settlement balances are held by just 3 of the country's financial institutions.
It's not fair!
So, there are 3 lenders that have 80% of the cash reserves available in the system, and the rest of the lenders only have collateral, hopefully, and the 3 banks that have the cash are being stingy with it. As such, analysts, unnamed analysts, says that the Bank of Canada needs to create penalties for those lenders which are refusing to part with their cash.
I want to sit down.
All right.
This is too good, though not really. Why are the banks hoarding cash, refusing to lend to the other banks? Remember, these banks that need the money are putting up supposedly good collateral, either government bonds or collections of mortgages in a mortgage-backed security. Why don't the other banks want to lend them money? For his part, CIBC's Ian Pollock says that scarcity has led these banks to want to hold on to their money, has led to the hoarding. So, if I have this correctly, the banks that have all of this cash are refusing to lend to other banks with supposedly perfectly good collateral at an interest rate of 4.75%. Rather, they'll gladly lend out the money at a 100 basis point premium to some Joe on the street vis-a-vis a mortgage, rather than lend to another financial institution that has supposedly good collateral and access to the standing liquidity facility, meaning that institution, if push came to shove, could just borrow money that it needs from the central bank. I'm not sure I buy that.
I didn't ask you what you think.
Now, and I really don't mean this as hyperbole, but this does raise a few concerns, as, if you'll remember, it was a lack of good collateral that, in part, brought down Lehman Brothers and to a certain extent jump-started the global financial crisis. Banks were not willing to lend to Lehman, as Lehman didn't have sufficient collateral, or, more accurately, the collateral that Lehman did have was full of mortgage-backed securities, which contained adjustable subprime mortgages that were never going to be paid. Which brings me back to the question, why aren't the banks lending money when they can very easily, almost risk-free, get 4.75% on an overnight loan? Now, I'm not specifically saying that Canadian banks are holding on to toxic assets and the 3 banks that have the cash don't want to lend those banks money, but I'm also saying I don't buy that they're just preferring to hold on to the cash, just preferring to hoard. Why the 3 financial institutions that have all of the money are refusing to lend it out to their other banking brethren remains to be seen. And I wanted to get this video out over the weekend, as the Bank of Canada does have a press conference next week, and I'm hoping one of the news organizations will get wind of it, one of the news organizations that are allowed at the press conference, and maybe ask the Bank of Canada governor what's going on. Bloomberg did have this article, but if history has shown us anything, Bloomberg will ask about rate cuts.
I stop now.
So, the Bank of Canada is once again injecting money into the banking system via overnight repo operations, and some unnamed analysts are saying that's because 3 of Canada's big banks are hoarding cash, refusing to lend to the others, at 4.75% risk-free. If the reason is that the banks just like to have those big bank accounts and don't want to let go of the money, that remains to be seen, but we will obviously continue to track this story on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.